that you went from zero dollars under management to $6 trillion, basically in 3 decades.
Larry Fink is BlackRock CEO. Larry Fink
is BlackRock Chair and CEO Larry Fink.
30 years old, $0 to $6 trillion.
But BlackRock in particular made some unbelievably crucial moves. Larry Fink comes to the fore.
One of the things that I think is just not a story that's very well told or really understood is the remarkable story of entrepreneurship that is your company. If you could pinpoint what made this work in such a stunning way, what was it?
So, Larry has a very interesting background.
When Hollywood is thought of as a way of life rather than a place on the map.
Let's go back to, you're growing up in Los Angeles in the 1950s. You go to UCLA,
right?
And UCLA Business School. What propelled you to go all the way to the East Coast when the weather is better in California, presumably life is great in LA? Why did you want to go to the East Coast?
I met a couple partners of various investment banking firms, and I was intrigued about it. I was asked for a bunch of interviews in New York, and it was just something that was very foreign to me and intriguing. And keep in mind, when I joined Wall Street in 1976, First Boston hired 12 people. That was the size of the training program. I think Goldman Sachs was 15. But the First Boston's market capitalization in 1976 was $30 million. I think Goldman's partnership was $50 million. People have no idea what has transformed this industry, how it changed itself.
At First Boston, he was a pioneer in developing an obscure financial product that was pretty much under the public radar until we had a little event called the Great Recession.
Signs were everywhere, but now it's official. We are in a recession. The research group that makes that determination made it today and said the recession actually started a year ago. But the question now, when will it end?
I'm, of course, talking about mortgage-backed securities.
In the 2000s, investors in the U.S. and abroad looking for a low-risk, high-return investment started throwing their money at the U.S. housing market. The thinking was they could get a better return from the interest rates homeowners paid on mortgages than they could by investing in things like U.S. Treasury bonds, which were paying very, very low interest.
Well, actually, I was in the mortgage area. I mean, I started in the mortgage area, and the mortgage area was just beginning. There was only Ginnie Mae Securities in, and then my division started the whole Freddie Mac trading. And
can you explain to the average person what securitization of mortgages is? You were a leader in that.
While still in his 20s, Larry made a lot of money for First Boston. I read something from one of your former partners at First Boston that said, this is a guy who always wanted more than he had. He was the guy whose nose was pressed against a window. You could sense his ambition. What was driving you this whole time? Because you got big pretty fast.
We were the most profitable division in First Boston in 1981, 82, 83, 84, 85. And what they did was they gave you more capital. We had no idea how we were making money. We had no technology to understand the risk. And let's step back. As I look at Steve sitting in front of us, it wasn't until 1983 that you had a computer on a trading desk.
So Larry Fink kicked off his career journey back in 1976 at First Boston, an investment bank based out of New York City. There, he dove headfirst into the world of mortgage-backed security trading, eventually steering the ship as the head honcho of the bond department.
You know, I was a superstar at the firm. I was the youngest managing director ever in the firm when I was 27. I was on the executive committee, management committee at 31, and I was an asshole at 34.
At First Boston, he wasn't just a cog in the machine. He'd played a key role on the management committee, held the prestigious title of managing directors, and even co-led the taxable fixed income division. Not one to rest on his laurels, he also set up the financial futures and options department and spearheaded the mortgage and real estate products group. Fink meticulously contributed a growth of $1 billion to First Boston's assets. But as life often does, it threw him a curveball. In 1986, his department took a $100 million loss due to a bad bet on interest rates.
And in 1986, We lost money.
Steve Jobs was fired.
Yeah.
Jeffrey Katzenberg was fired.
Yeah.
And you were fired.
Yeah. But I never forgave myself that we had no knowledge of the risks we were taking.
His traders had assumed a significant market position based on Fink's forecast of rising interest rates. However, when rates unexpectedly fell, not only did these traders suffer losses, but the protective measures meant to mitigate them also failed. Fink described a rapid shift in reputation from being looked up to being shunned, as his colleagues ceased communication and ostracized him. The lack of computer systems and risk assessment programs became evident as they were unable to accurately gauge the impact of crucial variables like interest rate fluctuations. Reflecting on the experience, Fink consistently emphasizes the importance of regular assessment of portfolio risks, even during periods of profitability, to prevent excessive risk-taking.
I wasn't fired, but I quit before I was near fired.
If you had stayed, you wouldn't have had the job.
Yeah, but I quit. No, but there's a different story. I knew for the $100 million event happened in the 86, and I left in 88. Okay, so I stayed around but I knew I was leaving at that moment, how the firm.
Did that drive some of this too?
I was so angry at myself. No, it drove.
You were angry with yourself.
I was just mortified at myself.
So Larry Fink now had to begin a new journey.
The chairman and CEO of BlackRock, Larry Fink.
So the history of these two firms is that back in the late 80s, when Blackstone was first getting started, Steve Schwarzman met a guy named Larry Fink, who was a very successful mortgage trader at First Boston. Fink left his job there.
Is that you went to Steve Schwarzman, who was the firm was only 3 years old, I think.
No, it was a year and a half old.
Year and a half old, okay. And you went to them and said, I want to start this firm.
I came up with a business plan, told them what we were going to do, told them what type of money we needed. I actually had, they were going to fund me to start my own company. And because of the First Boston experience, I did not have that confidence in myself to do it. And I came to Steve. I helped Steve. I was asked by a partner of First Boston to help Blackstone raise their first fund. So I got to know Steve and Pete through that effort. And it was through that effort, we went to them after they just finished raising their first private equity fund of like $530 million. I went to them and gave them a business plan, and I became the fourth partner of the Blackstone Group. And so it took me a year and a half to assemble my thoughts, and I told the story to Steve Schwarzman and Pete Peterson, and they loved it, and they had more confidence in me than I had myself. They wanted to go right ahead, and we did that, and it all, we actually started making money within 2 weeks. I mean, the outpouring of competitors, friends, clients that I had from my years at First Boston all came. And
Schwarzman said, come work with me. They made beautiful music together for a few years. Then they had what each has described as a fairly bitter corporate divorce. And BlackRock and Larry Fink went on its way. And over the subsequent 20 years or so, these firms really existed in parallel and became the dominant firms in their respective industries.
And I knew we needed to evolve, but I do believe the whole foundation of risk management was the key characteristic that differentiated us. As a young little firm in 1994, when GE was having a bad time with Kidder Peabody and they had to liquidate it, they didn't call one of the Wall Street firms to help them liquidate Kidder. We were hired. But we finally, after 1 or 2 years, people started realizing that we represented it was a cheap stock. We were living up to the promises that we told our shareholders. Stock went to 28. We started doing more, but then it was really the discovery that I thought we had the culture to do acquisitions.
Today, if you look back on your legacy, what are you most proud of? You built the biggest money management firm. Presumably you've made money for lots of people, so that's a good thing. But what are you most proud of having achieved?
My legacy will not be about the moment about the time I was leading the company. My legacy will be about how well the company does after me, not while I'm there. And so that is really important. Probably the proudest moment for me will be, and I haven't executed this yet, when I leave the firm, that I could watch the firm grow, do better without me. That would be the ultimate accomplishment of a founder.
All right.
And so I'm sticking around longer than I probably otherwise thought I was going to stick around, to make sure that next generation is ready. And when I believe they're ready, I will be out. And so, I don't know. I never planned what this outcome of what BlackRock is today. I am absolutely excited about other opportunities. And I know I have one more gig. So whatever that next gig is, I'll be around.
Ladies and gentlemen, Larry Fink.
Thank you
Thank you very much. Thank you.
Thank you.